Tonight's government moves to save the economy from collapse, with the Bank of Ghana first to act with an increase in the monetary policy rate. We tell you what that means for you, with the finance minister up next, expected to also announce a raft of austerity measures.
The MPC is confident that the ongoing discussions would lead to very decisive policy reforms. The committee has decided to increase the policy rate by 250 basis points to 17%.
We have reactions and analysis for you tonight.
This is Top Story with Evans Mensah.
And Top Story is always brought to you by Vodafone and Prime Insurance. President Akufo-Addo had promised far-reaching measures to save the economy from total collapse. Well, in the last few hours, the Bank of Ghana has become the first state agency to go public with measures designed to pull the economy back from the brink. The finance minister will be next with what is expected to be a raft of austerity measures. Here is the governor of the central bank, Dr. Ernest Adesing, announcing his measures, including a significant increase in the policy rate today.
Revenue performance has been slow to align with projections, while expenditure remains rigid downwards, despite strong efforts to cut expenditure by 20% as announced by the government. The above has resulted in financing constraints, which would have to be resolved very swiftly to ensure the announced fiscal consolidation path is achieved. The MPC is, however, confident that the ongoing discussions would lead to very decisive policy reforms that will address underlying fiscal mismatches and restore some calm in the markets. This, together with a monetary policy decision and additional measures, should help re-anchor inflation expectations. Under these circumstances, the committee has decided to increase the policy rate by 250 basis points to 17%. In addition to the upward policy rate adjustment, the Bank of Ghana will effective 1st April 2022 enforce the following measures in relation to the universal banks. The cash reserve ratio is increased to 12%. The capital conservation buffer is reset to the pre-pandemic level of 3%, making the capital adequacy ratio a total of 13%. And the provisioning rate for loans in the other loans exceptionally mentioned category is reset to the pre-pandemic level of 10%.
Well, there are a few other measures that we would break down for you, but my colleague George Raffi, who was at the press conference, joins me in the studio. Let's help you make sense of what you just heard there. So, George, when the central bank governor says that the policy rate has been increased from 250 basis points to 17%, first of all, what is the policy rate?
So, Evans, you're looking at the rate at which the central bank or the Bank of Ghana lends to commercial banks in the country. It is deemed as the lender of last resort, or these overnight lending and all the rest. So if you go to the Bank of Ghana, if you're a commercial bank, and if you go to the Bank of Ghana, that will be the rate at which they will be charging you for you to pay on interest when you borrow from the Bank of Ghana. That is expected to impact on the base rates of these commercial banks in the country. And that would in turn also affect you, Evans, if you should walk to any commercial bank in the country to try and get a loan or try to service that existing loan that you already hold with that commercial bank. So what the Bank of Ghana is trying to do here, it is
seen. Just a second. So what that means is that it will be more expensive for the banks to borrow from the central bank.
Central bank.
And in turn, it will be more expensive for you, the ordinary person listening,
also
to also borrow from your bank.
The cost is going to go up.
The cost of borrowing for you.
The impact here is that it is believed that there is some excess liquidity in the system. And the Bank of Ghana has a major primary objective of what you call inflation targeting. How do you put in place the necessary policy measures to ensure that inflation is brought under control?
Okay.
So if there is excess money in the system and it's not going or being directed at productive activities to bring about growth, and people have made money during COVID, let me use that quote, and they are not putting it to productive ventures, they are holding on to it. They are seeing that, the city is depreciating, they are going in to buy dollars, they are not putting into more productive activities. The Bank of Ghana needs to find some innovative ways to deal with this. And the policy rate has been seen as one of those basic tools that central banks around the world will use when they see that there is too much liquidity in the system to try and mop up, and then that could deal with that problem. Also, you want to look at the fact that the city is depreciating. So it is seen that city assets are not more good, if I should use that, and all the rest. So this could also more of make city assets more kind of good, so that investors will gravitate towards city
When you say
assets.
CD asset,
These are notes, these are investment instruments that are priced or linked directly to the Ghana city, because there were even news that some people were liquidating their bonds to go and buy dollars because the Ghana city is depreciating. So then this would then make papers, bonds, investment instruments that are directly linked to the Ghana city going up, and then people would now be more calm or more relaxed to that, okay, because of what has happened, I will now be moving towards city assets to put my investments in. So what this whole thing is trying to do is that to try and mop up what is seen as excess liquidity in the market. And that would then make sure that there isn't too much money in the system where people who do not have anything to do with that money would want to rush in.
So when you have too much money chasing small amounts of goods, and you have inflation.
That is those basic.
Exactly,
Yeah.
Economics 101. When you reduce the amount of liquidity in the system, the thinking then is that it then affects how much money is chasing the goods,
Yeah.
and then
Yeah.
that leads to inflation coming down, which is about 15%.
That is seen that it
Okay.
could indirectly go a long way to check the hikes in inflation.
Okay.
Also, don't forget that people have invested, and also what you want to do is that you want to give some good returns to investors. Inflation rate going up is wiping away that investment.
True.
Inflation is somewhere very high.
15%.
And you look at your policy rate as well. That means that the real return rate to investors is nothing to write home about. So that is what you want to use this policy rate to correct.
Okay, so that's what this means for you. So again, when you go to your market and your favorite shop to buy, and you see the prices going up, that you come there today, tomorrow you come and it's gone up, that's inflation.
Yeah.
I mean, the Bank of Ghana is doing this to try and check and arrest that. In essence.
And even just one quick important thing that these are some of the basic tools and models
Everybody
that
will want to use. In fact,
most of the developed economies around
Russia
the
did
world
same
have
when the
used
ruble
it.
collapsed
You
after
know,
the sanctions
in
increased.
Egypt as well has been done. As to whether we can devise a more localized approach to deal with this, that's another thing altogether. Some have also said that, listen, we are just recovering from COVID. How do you also deal with the challenge where this would impact credit extension to small businesses as well? But some would argue that, lesser of two evils. How do you check the city's depreciation and inflation? Maybe later deal with the challenge of access to credit for business, because it is going to make cash expensive for you and I.
And very quickly, George, this is the only measure that was announced. There were three others. That is from the 1st of April, a few things will happen.
Yeah.
One is that the cash reserve ratio is increased to 12%.
Yeah.
What does that?
So the
Very
Bank of
quickly.
Ghana is looking at the fact that if a bank takes deposits from, a retail customer, you're supposed to keep a fraction of that again with the Bank of Ghana in terms of those holding that deposit. Now, just try to break this thing down and move away from the jargons. The Bank of Ghana is just trying to mop up, make capital or cash a little bit expensive in the system.
Okay, so
the
the same
if
principle.
you're holding more, because there were even reports that some banks again were just buying treasury bills. They were not lending this money to businesses. They were going in and betting on the Ghana city, investing in dollar assets and all the rest. So if you have limited cash at your disposal, then that will be directed more at prudent investments that could quickly bring you some returns as well. And some are saying that, listen, why are we seeing the dollarization of the economy? If the Ghana city is not seen as that strong, everybody is going to gravitate to the dollar. So some of these things are meant to strengthen the Ghana city, and that could then lead people to dealing with this. And this has been some basic tools that central banks all over the world have used, and the response sometimes has been quite good.
And George, very quickly, I mean, in the past, what has happened is the central bank simply, when we have such steep depreciation of the city, central bank tends to just pump in money into the economy. It turns out today that Dr. Adesing has said that it's actually been doing that in the last few weeks, pumping a lot of money and servicing the likes of the BDCs, spending a lot of dollars to import crude. Tell us more about this.
So the argument was that the Bank of Ghana wasn't doing much, but the governor was arguing that there has been some targeted support for dollars to some of these critical sectors of the economy. And if you're able to do that, that could also lessen the speculative activities, because if a business is there and they think that in the next 2 months they will struggle to get dollars, they've trained to use this forward auction sale of dollars to deal with that challenge. And therefore, I know that in the next 2 or 3 months, I can get access to dollars based on this agreement with the Bank of Ghana. That will reduce that speculative measure where I want to rush and get dollars now when I just need those dollars in 3 months or in 4 months.
And this is Dr. Adesing detailing which particular agencies have been receiving foreign exchange support.
We've made foreign exchange available to the market broadly, and we think all of that should help in terms of mitigating the pace of depreciation of the cedi. Now, these are all short-term measures, immediate measures that we are taking to address the matter. But we also this morning have announced an increase in our policy rate. That action in itself should make our domestic assets more attractive and improve the incentives for investing in cedi-denominated assets. So the significant policy rate adjustment that you saw is also aimed at strengthening the cedi. Some of the medium to longer term actions, you mentioned the domestic gold purchasing program. These are things that would impact the level of gross reserves in the medium term. We've made quite some progress in terms, I think we've bought over 600 kilograms of Doré gold. But this gold has to be refined to very high standards before they will qualify as a reserve asset. And we are in the process of fulfilling all the due diligence requirements that the refineries, the LBMA certified refineries in the world look out for. We are hoping, we are quite sure that in the next month or two, we would be able to export the Doré gold that we have. And once that is refined, it will become part of our gross reserves. Issues that we also discussed at this weekend retreat in the medium term is also to look at some of the retention agreements that we have with the oil marketing, with the oil drilling companies, etc. These are really medium to longer term issues. We should help improve the foreign exchange earning capacity.
I want to quickly bring in Associate Professor of Finance, University of Ghana Business School, Professor Lord Mensah joins us on the telephone line right now. Also joining me is the Chief Executive of the Chamber of BDCs. He had the Dr. Adesing. When he says OMCs, actually means the BDCs. Why is that important? As you know, one of the reasons why the cedi is depreciating is that we just simply have, the dollar is small. A lot of cedis chasing, there's a small amount of dollars in the system. And the BOG is saying to us tonight that they're giving support. They're giving a lot of dollars to the BDC so they can make the purchases so that the pressure on the dollar, on the cedi would not be as much. Thank you very much, Senor Jose, for your time. Thank you, Professor Lord Mensah. Prof, let me start with you very quickly. So we've just seen the measures announced by the central bank. What's your verdict on this? Would it help with the situation with the cedi and generally with the economic recovery?
Yes, I would say in the short term, it will help in a way, but not in the long term. I mean, we've had this intervention most of the time, anytime we're having this cycle of the CD depreciating. It's a normal cycle for which every first quarter of the year it's the experience. But this particular year's one seems to be the abnormal cycle, which I think they find it difficult to handle, in a sense that on the market, if you look at the agents who demand the dollar, government is part of it. We're looking at the businesses, and then we're looking at individuals. But most of the time, government demand for the dollar are normally shifted outside. So you look at some years that government is able to borrow from the Eurobond market. This year, it looks like things will not happen that way. So therefore, the dollars that are supposed to be received from the Eurobond market through bond issue to come and serve as a buffer, we may not get it, but rather we have to recycle what is in the system already. To meet out the necessary demand in the first quarter. So that has turned up to be shifting a normal anticipated cycle that we have every quarter. Every quarter we know very well that, businesses repatriate to their owners, and most of the time, foreign investors being the owners, you may need dollar to pay them back. And that is when we have to use dollar to meet that kind of demand. But this time, government is also on the market, and that is why I believe that the free fall that is being experienced in the first quarter this time seems to be abnormal. But the measures put in place, like I said, I like the target part of it, where clearly they're saying that the monies will be made available for import-oriented companies like the BDCs and all those. But then also the forward market that was announced. I think this morning I was deliberating on it with a friend, and I said, fine, they may pump in the $2 billion. Sorry, they may pump in the $2 billion dollars that it's talking about. But if they don't very well, it might not make impact even in the short term, because government in itself has obligations in that $2 billion. Because I know very well Eurobonds and all those are going to mature within the year, and with all those anticipations, we should expect that $2 billion that will be pumped into the system, government will take part of it to satisfy it.
Also quickly give me a verdict on the policy rate increase. As you've just explained there, it will make cost of borrowing for the banks more expensive, and of course make cost of borrowing for me and you also expensive. But of course, then it reduces the liquidity in the system and helps inflation. It's a double-edged sword here. Is it in the long term? Is this a solution?
Well, the policy rate that is being used to target inflation has been the norm, over the years and across countries. But for me, I seem to have problem with ours, because if the feed of the policy rate into, lending, the feed into interest rate structures is quite slow. Most of the time, when it is, lowered this year or this quarter, you don't get an impact until the last quarter of the year most of the time. There's that kind of lead effect when it comes to the impact of the, policy rate on the various interest rate structures. The reason why we having this issue in this country is that we have the policy rate and then we have the treasury bill rate forming part of the, what we call the Ghana reference rate, which is the base rate for pricing a loan. But there's another part which is a markup, cost, which is an interest rate added on to the reference. And that depends on the risk premium of the investor. So if the investor poses more risk or the economy poses more risk, the bank shifts more weight to that side, and the loans prices still kept upward. So effectively, we've been having that sluggish, fee of the policy rate into our loan pricing. But then, Evans, let's look at, the structure of our economy. The structure of our economy, if we see inflation, it might not necessarily be, more cities chasing, few goods.
Few goods. Mm-hmm.
You look at the inflation in our country, you realize that chunk of it is important. We know very well that controlling, trying to, squeeze out money from the system in a way will build up into the exchange rate dynamics and all those. But I can tell you that it will not be easy. because if you take, our exchange rate and then you import exchange rate you import inflation into our country. Definitely, if you use that kind of CD mechanism where you're using the policy rate to target the inflation, you might not hit it right. So I would have expected that more of the weighting to be on the exchange rate rather, because if you are placing weight on what drives inflation, we're looking at the exchange rate importation and then the inherent system of having more CDs chasing few goods. We don't normally have that problem. You realize that anytime we have inflation, it's the exchange rate that is pushing, because it's an import-driven economy where.
So what your solution is that address the exchange rate problem, and the inflation will be fixed.
We should take on the exchange rate head on.
Okay. I mean, thank you, Prof, for your time there. And since we're talking about the exchange rate, let me quickly bring in Senor Hossi with the BDCs, because the announcement today is that the Bank of Ghana was giving some special forex support to the BDCs to deal with that exchange rate problem with the CD depreciation. Mr. Hossi, you had the central bank governor. Your quick reaction to him?
Good evening, Evans. I missed that, so I'd be happy if you could recap that.
Centrally, he says that in the last few weeks, they've been giving yourselves some special forex support to facilitate the importation of the products onto the market, because, of course, you require so much forex, dollars to do the importation, which possibly may be affecting, the depreciation we've seen, and the BOG has been supporting in that respect.
Okay, I can confirm there's been some support received. We've been engaging the BOG. I think they released about $160 million to the entire energy sector, so not just the BDCs, but I think they did some, but not in a very structured way as we would have wanted. But it was very critical for the particular moment to release some tension. But we have been engaging, and hopefully on Wednesday we should be having further engagements to come up with a structure which is also geared around the forward market, to ensure that some of these interventions can cascade into lower pump prices than we currently see on the market. So we're still joined, and we hope that we'll be able to come to some consensus on how we get things done. Our market now needs about $300 million every month, to cover our monthly import bill. So we need to make some adjustments together with the central bank, but that is yet to be finalized.
Yeah, I mean, you said something that caught my attention
on Wednesday.
You said something that caught my attention as a consumer. You're saying that with the support you're receiving, you're expecting that prices at the pumps will go down?
I'm expecting that the support that we will structure, not what we have received or not received. No. I'm sure the governor was talking about what we've been discussing, but I think that should take better shape on Wednesday. If we're able to structure that right, we should see a significant impact on pump prices. And sorry, it's one of the interventions I think government has been quite amenable to, and we are grateful to central government and the governor for their cooperation on that front.
Yeah.
It's time for all of us to work together to help the country navigate this difficult time.
I mean, just help me understand, when you say restructure, what's the thinking? What are you thinking about there? What are you restructuring?
Okay. The way we have run our markets, the BDCs just fit into the general market. We all just keep chasing the same dollars. We account for close to 20% of the import bill, somewhere around 15 and 20. Now with prices going high, I think we'll be near more like the 20% of the entire country's import bill. That's very significant. You can't wish that industry away. Now, government or central bank occasionally supply the entire market, gets into BDC hands. But what you do is that you don't have a market structure that would have that cascade to the consumer. And I'll give further explanation on that. If we are like 10 people and only 2 people get it, you and the 8 are actually pricing products with an exchange rate assumption of, say, 8.5. But 2 people get FX at 7.0. The 2 people who've gotten it are not going to reduce their prices just because they got BOG effect. They are going to set prices based on the general market sentiment, which would then be at 8.5. So all that the central bank would have done is to put money in people's pockets through an arbitrage, unreasonably. But it would have still have solved some kind of supply problem. So what we said, look, we need to make sure government's interventions be optimum, not just making sure there's effect in the system, but also its effect should cascade to the consumer. Because at the end of the day, it is the consumer's effects that we are using. The people of Ghana own that exchange, that forex that the Bank of Ghana is releasing to the market. So it must come and give consumers some reprieve, at least in cost. And for the central bank, it's even more important because the petroleum cost is a major feature of our inflation matrix. And if we run all our inflation models, petrol prices or diesel prices
very
are
significant.
big in there. So if you are not getting the full effect at the pump, then it means your inflation targeting will on-target its own self at the end of the day with your intervention. So we need to have a structure. We are looking at the forward market, at least for a short period, a targeted solution. We did papers last week. I know the governor's been looking at it, been cooperative on it. On Wednesday, we should discuss it further. And some of these proposals are not just coming from us as a chamber, but coming together with the Association of Bankers. So we can all help government and navigate the time. So hopefully you should have better prices that at the pump once these things are resolved.
Senor, thank you very much. And so that's the BDC chief executive. They import the bulk petrol and diesel that you buy at the pumps, and you're telling you that after Wednesday, hopefully, you may see some reprieve at the pumps, at your favorite filling station. You may, if all goes well with the structure that he just detailed, you may be buying petrol and diesel cheaper than you currently buy with all the arrangement and restructuring going on. Let's quickly get a view from the ranking member on the finance committee, Dr. Kesalato Forsing. Of course, he was a former deputy finance minister. They were in power. They also had similar challenges. So they've seen the Bank of Ghana's intervention right now. What is his verdict on this? Dr. Forsing, I'm grateful for your time here on Top Story.
Evans, thank you.
What's your verdict on the BOG's intervention today?
Even largely, I would say it's quite bold and it comes across as structured. But I think it is a bit too late in the day. I say this because the central bank themselves saw a reduction of the net international reserves back in December, where approximately $700 million was lost. In January, we've lost another $600 million in net international reserves. In fact, according to central bank's own data posted on their own website, the cedi depreciation at the interbank level started somewhere in April. So I was expecting that this hiking that they did today should have happened a little bit earlier. They could have given some hope to investors. Today we are losing in reserves at a very alarming rate. My only concern is that the package that the central bank has actually provided will not be enough, in the sense that the large of the problem, the concerns of the investors who are actually repatriating and taking their money away are actually because of the fiscal situation. So I want to see what the fiscal authorities will do, and as to whether that information will be enough for the market to respond appropriately or not. We only wait to see. But let me say that I've heard the BDC speak, but I'm only cautioning the central bank that they should not attempt to use the reserves that is already left, particularly the net reserves, the unencumbered reserves, for the purposes of intervening. That will mean a disaster that is staring at us. Because when the investors are to see that the reserves keep going down, then they will be rushing to exit. And if they exit, then obviously the currency is going to drop and drop and drop until it falls. That is what I'm worried about.
Dr. Forson, thank you very much for your input there. He says it's bold, but of course he says possibly too little, too late. What's your own take on the intervention today by the Bank of Ghana? Let me hear from you. 055 11 11 997. Top news night.